on that note, have we seen the bottom or not? Sam just says, did we see a bottom or not? It's hard to gauge, Sam. Really, it is. I expect a lot of continued volatility and choppiness over the next few weeks in this case. But something I wanted to share with everyone is something I came across the other day. And I came across an article, and it was titled, "The Coronavirus Just Doubled the Risk of Mass Bankruptcies." Well, you kind of think of that, but is there an actual gauge of a company? And there is. It's this article appeared on Yahoo Finance, and it contains remarks from Ed Altman. I don't know if you guys know him, but he's the one that created the Z-score and the Z-prime score, sort of those scores for the bankruptcy indicators on a stock position based on debt, available liabilities, assets, and more. And some of the important comments, I just copied and pasted them here, but we'll walk through them very quickly. The article opens with, "The risk of mass bankruptcies across the U.S. continues to rise as more companies grapple with the fallout stemming from efforts to battle the spread of coronavirus," according to this leading bankruptcy professor, Ed Altman. The numbers behind it, Altman goes on to say, "Our numbers are showing a likely default rate over the next 10 to 12 months of just under 10%. Doesn't sound like a lot, but it's actually huge. And it has been an increase in a very short period of time. It does signal a crisis in the credit market whenever you get to this 10% level of securities that may be entering into that risk of bankruptcy." He has a distress ratio, which is the percentage of companies whose bonds are selling above 10% or more than comparable treasuries. This has spiked to 30%. The only time it has ever been higher was in 2008 in December, when it was around 80%. So still a long ways to go. And the sort of final thought, there's a lot more to it, but his analysis showed using the Z-score method that more than 30% of the 3BB's companies already look like non-investment grade, and that the impact would be much greater than the 10% it's reflecting. If it was followed by a recession, there's no question in his mind that this would be the worst period for corporate default amounts that we've ever seen. Why am I going through this? Why am I bringing it up to you? Well, the bankruptcy indicators, there's the Z-score, the Z-prime score, which is a little bit more related to banks and other financial companies, a little bit different score that they use, and also a single score, I should say, called the spring gate. And this allows investors to see if companies that are passing these bankruptcy grades are failing. Typically, a Z-score of greater than 2.67 means that the firm is unlikely to go bankrupt. Between, I think, 1.8 and 2.67 is marginal. Below 1.8 means the firm is likely to go bankrupt. A spring gate score above 0.862 is considered passing. Below that is considered failing. So why do I bring this up? Well, Sam had mentioned, have we seen the bottom or not? And we've got questions that are coming in. Or are we looking to nibble now at the lower end, looking to buy at the bottom, perhaps hoping for a recovery? Well, I'm not going to say that we are or we aren't. It's going to be very difficult. But if you are nibbling, you have these settings in all of the searches on PowerOptions to look for companies that have a passing or perhaps a failing Z-score or Springgate score, depending on if you're going into a bull strategy or bear strategy. From bullish, I want those higher numbers. I want the firm not likely to be bankrupt, whether I'm looking at new covered calls, deep out of the money naked puts with higher volatility, opening new married puts perhaps, maybe even standard collar positions, or if you're trying out some diagonal spreads right now, which with the high volatility might be a little bit risky. Yes, you're getting good premium, but you're also paying more into that long option. But you'd want to use these scores, and let's just take a quick look here. We'll navigate over to PowerOptions, and we'll just go into, sorry folks, the covered call menu there. All right, here we go. I'll just use married put, for example. So if I open our default married put search now, I'm only going to get one result. And part of the reason why is because in covered calls, naked puts, bull put credit spreads, married puts, we're typically always looking for some kind of technical where maybe the stock is trading above the 20-day or the 50-day moving average, maybe even a positive MACD sign. We're not seeing a lot of stocks that have that in the recent market conditions. So to open up the universe more, I'll take out that simple moving average field. Now I'm going to go into the fundamentals. And you'll see this, the same criteria in any strategy. But here we have our Z-score, and it gives us a definition, is that between 1.8 and 2.67 is marginal. Above 2.67, the firm is not likely to go bankrupt. So we can go ahead and put that in as well. A Springgate's similar, but just a single-digit score. Springgate below 0.862 means the firm is likely to go bankrupt, and above 0.862 is passing. So for bullish strategies, I'll use those two filters. Again, covered calls, out of the money naked puts, diagonal spreads, married puts, standard collars, things of that nature. I'll want to include this z-score here to try to avoid companies where the new z-score number is maybe below failing due to recent events. So let's just see if we get anything. Opening up a little bit. No. Okay, so there's nothing right now, even though we took out with the limited universe we're looking at for the stock list, but even taking that out and looking for those z-score ranges, we're not seeing anything. Let me take out Springgate and just use the z-score. Hopefully that'll give us something. Now, okay, I know that was just updated as well, so it might be a little bit more bleak. Let's just change the list very quickly. So you saw how to do it. That's the most important thing. Let me go to note. I'm sorry. I know my mistake, but I'll do this anyway. There's Genitex. Mike, you know this with talking to myself, folks. I'm sorry. With the increased implied volatility, I've got to up this risk to about 15%, and I got to go a little bit more strikes out of the money than I normally would. That's going to open this up a little bit more. There we go. Now, I would warn against some of the oil and gas companies with what's going on right now, even though it matches the criteria. But you've got some positions that we see, common names, Marvel, Etsy, Micron, Square. Yes, they're mostly all down today. AMD, Nike had that big move yesterday, Facebook, Twitter. There's only 16 total results, and we're looking at the top 15. So yes, for the married puts, I had to allocate a little bit more. I apologize for the risk, go a little bit further number of strikes out of the money there to allow those to come in. But all of them are in a high risk range, almost double of what I'd normally see, except for Genitex. It's nice, 7.1%. But this is what, unfortunately, we expect with a higher implied volatile market. So again, that's just the article there. Here's what I'm going to do. I'm going to highlight this for everyone. Okay. And we'll go ahead and I'll send that to everyone in the chat if you want to check that out. I just thought it was kind of neat and kind of useful. Did that get all of it? Yes, it did. Okay, great. So there's the link there I just sent in the chat for everyone. And at the same time, here we go. Let me navigate back. So for those of you, of course, here who are watching the recording, who weren't here live to get the link, there's the link there. You can try to copy it or jot it down on there. It was written by Zach Guzman, interviewing Ed Altman, who created the Z-score and the Z-prime score. Springgate is another measure as well. Okay, before we go into the next question, I see Octavio's question there. And I reviewed some of Sam's earlier comments there. They're good. And yeah, the volatility is not going away, Sam. That's one of the problems I just had with that search. I knew to increase that. I just forgot it. We talked about it last week. And Sam continues to say over there in London, I believe, that you're having increased infection reported. We're having the same thing here in New York and in a few other states. Louisiana spiked drastically today here in the U.S. around New Orleans. It said infection reported can't control at this stage. The trials are going to be longer as well.